If you want to change your tax, you have to change your facts. And it's that simple. For example, got my company coffee mug here, and somebody could ask me, is that deductible? And the answer is, I don't know. But if you ask me, how do I make that deductible? I can tell you. I can tell you what facts you have to change in order to make anything deductible. And I think the goal of any good advisor is to give people a choice. But unless you have the information to know that there is a choice or to know what the choices are, how can you ever make a choice? It's really de facto whatever you've been told, right? Mm-hmm. Well, it's my obligation to pay tax. Well, it's your obligation to pay the tax you're obligated to pay, but it's not your obligation to pay the maximum amount of tax.
Today, I have an incredible guest for you who is talking about that topic that literally makes the world go round. If I have to tell you what it is, I think you're in the wrong place, but I'm pretty sure you know. And I know you're going to like this podcast, so make sure you like, comment, share, and subscribe. And without any further ado, I am going to introduce today's guest, whose goal in life, check this out, because I had to write it down and reread it because I was like, man, sign me up. This man's goal is to make taxes fun, easy, and understandable. Who does not want to listen to Tom Wheelwright? Thank you so much, Tom, for coming on today.
Oh, thanks so much for having me on. This is quite an honor and a pleasure.
Oh, I am so thrilled. So before we talk about the topic that everybody hates, maybe not you, but most people, right? I hate taxes. Give us a little bit of background, not necessarily the CPA professional background, but tell us about Tom, the man, the little boy, and how you got to here. Like, I want to know the inside scoop that the kids that grew up with you know, but nobody else does.
All right. So I grew up in Salt Lake City, Utah. So
Are you a member of the church?
I was a good Mormon boy. Yep. And was. Spent 55 years in the Mormon church. And so of course I was a Mormon missionary when I was 19. I spent 2 years in Paris learning how to get rejected in French. So oui, un peu. I can get by pretty well when I go to Paris, and I do love Paris. And
I only know one other line in French from a song, in spite of taking it for 4 years. And since I want to keep this clean, I will not share it with you.
Oh, okay. I know that song. I know which song you're talking about. There's also Michelle, right, from the Beatles. That one's a clean song, so that one's okay.
Yeah, that wasn't fun though. No. Okay, so you're in Paris, the city of lights, getting rejected.
Absolutely. So, which was absolutely fantastic because I learned about, first, I learned a number of things. I learned about the French people are very different from Americans. They have a very, they don't have a lot of acquaintances, but they have more friends than Americans do. So they're very tight.
You have to tell us a little bit more about that, but I just want you to timeline. Are you 18? Did you do your admission before?
19 years old. I looked 14.
You still look pretty young.
No, I'm serious. I looked 14. I had somebody, I actually was talking to somebody on the street, and this fellow looks at me and said, "Why would I listen to a 14-year-old tell me about religion?"
What'd you say?
I said, "Well, I'm actually not 14. I'm 19, but I'm still young. I get it." So, but French, what's great about French is it's the best language in the world to argue with, because it's such a beautiful language. It sounds like symphony when you're speaking it and when you listen to it. And good French is good French as a language is like good French food or good French wine. I mean, it's just that rich. And I remember.
So you drink wine now, I take it.
I do, yes.
And when you were the LDS, you did.
I did not, right? And I do drink wine now, but I actually do drink French wine. I much prefer the French wine to other wines. But I remember I stopped we used to call them jeunes pères. They're young fathers. They were our target.
Okay.
And
oh, they won. Why is that? Why was that?
Because in France, the church was small enough that you wanted to bring stability, and the way you bring stability is to bring families with fathers, and that's how you brought stability and leadership.
That's true for anywhere. That's true for anywhere.
It absolutely is, and that's why cities,
that's half the problem.
Yep, and that's why that was the target. But I was talking to him at the bus stop. He let 3 buses go by while we were arguing for half an hour. It was awesome, and they don't take anything personal.
Well, hang on, Tom. I have to tell you something. You just gave me goosebumps. You're going to crack up. This is a little sidebar, but this is interesting. So today, the day that we're recording this is March 1st. Okay. I'm sure this will air much later. It is the date that I met my husband many, many, many years ago. And we met on I was not a fast girl. Trust me. I was too naive. We met on the New York City subway.
There you go.
Back in the day where you didn't talk to anybody. But the joke is the seat next to me opened up and he knocked down 10 people to come sit next to me. Totally a joke. We started a conversation and he missed his stop.
There you go.
And I said to him, you've been out of New York too long. You should have just left. He said, no, I was enjoying my conversation. I was clueless. No idea I was being picked up. But anyway, you just made me think of that. So 3 buses go by.
3 buses go by, and we have a half-hour discussion about religion. I mean, he didn't agree to have us come visit him or anything. But what I love, I'll tell you, I think the French invented the 7-course meal so that they could have a 4-hour argument without the food getting cold. Because
that's hysterical.
Because literally, I mean, you just the whole 4 hours, and a 4-hour meal is not uncommon. If you're having company over, you have 4 hours, and you do have 7 courses, and
right.
Because you don't want to argue over cold food. You want to eat your food, and then you can argue. But it's not like Americans. Americans are I think bizarre in that Americans.
Well, Tom, would you go back to what you were saying about the friendships versus the acquaintances?
Yeah. So this goes into this. I mean, the French have a circle of friends, and once you're a friend, it's hard to get into the circle. Okay. Americans have a very big circle, really easy to get in, friendly with anybody. They'll say hi to you on the street. French won't say hi to you on the street. But once you're in their circle, they'll do anything for you. So, French get a bad rap because, they're cold, et cetera. No, they're just not superficial like Americans. They're actually very, they talk about politics without getting emotional about it. They talk about religion. They actually say, if you're not going to talk about religion and politics, why are you talking? Right. So they love to talk.
Not a lot of chit chat. Not a lot of chit chat. It's just not that casual relationship that Americans like. It's very, this was my history,
experience.
Right? That speaks to the history. We're so young.
Of course. Yeah. And it's a very deep culture. It's a very deep culture. So I love.
They're sort of kind of stuck on themselves, though. Come on.
That would be true. Okay. So you're comparing Parisians, not French.
Fair enough.
Okay. And you would, and a lot of people would say the same thing about New Yorkers.
Mea culpa.
Okay.
Oh, wait a minute. Did you just throw shade on my New Yorkers? Wait a minute. I almost let that go by. Oh, you know what? Tom, there's a reason why you're so successful. That was brilliant what you just did. That's 1,000% accurate analogy. Awesome. I'm not going to beat you here today.
I'm just saying, if you had a French person go to New York versus somebody who went to Arizona or Florida, they'd have a completely different reaction to Americans. Sure. Right? All Americans are brash, they're rude, they push you aside, they're always running from one place to another. But you wouldn't get that if they came to Arizona. You wouldn't get that to come to Florida. Maybe a little more because there are a lot of New Yorkers in Florida, but still, my point is that once you get outside of Paris, it's just a whole different.
And that's true. And you know what? When my husband and I did go to Paris, to France, but we did travel throughout the country. what we were told, and actually they were really quite friendly, right? I was just joking with the stereotype. They said Americans will go up to you and say, could you please tell me where the whatever is? When you're in France, just say, hello, how are you? May I ask you a question? Like, and really, it is quite civilized, but we're Americans, we got things to do, So, all right, that's fair enough. So you're in France, you're in Paris, and you spend 2 years there. Do you come back I've had many LDS clients I work with. Do you come back transformed, like I've been told by a lot of people?
Oh, very much from a cultural standpoint, for sure. Because first of all, I mean, I think every young man needs to go and spend some time in service to something other than themselves.
My husband says that all the time. He said he thinks that's the problem with the States. They'll never bring back the draft, but you must know that there's something greater than you.
Absolutely. So whether it's, whether you're doing some kind of a mission, whether you're going into the military, whatever it is, I think young men really need that, right? They need, because they're so self-absorbed, and they need to figure out, okay, what is it to get out and see other cultures, see other people. But the other thing is, you get a whole different view of the world. I mean, we talk about, for example, I hang out with people who talk a lot about, the dangers of socialism. I'm going, or people who say, well, socialism is good. I hang out with both sides of it, and I'm going, well, okay, you say socialism is good. Have you ever lived through a train strike in France, or a postage strike in France? You say, you say, well, you say, well, the United States going to socialism. I said, you have no idea what socialism is, because you've not lived in a more socialistic country like France. And, it's nice to have those different cultural experiences. It doesn't necessarily mean, France. I mean, I've been all over the world like you have, and spoken on all the continents. And Australia, very different culture,
right?
Asia, Japan, just a delightful culture. I love Japan, and I have a brother who lives in China. It's a difficult time over there, but yes, I do.
What's he doing over there?
He actually funded and helped build the very first FDA-approved drug manufacturing facility in China.
Is he a biochemist?
He is. He has a PhD in biochemical engineering from Berkeley, California.
Wow. Yep. Wow. Oh, brains in the family.
I'm the runt of the litter, for sure.
Yeah, I'm sure. I got that impression.
You don't know. My oldest brother was a Harvard Business School, graduate school business professor at Harvard for 30 years. So I'm definitely the runt of the litter.
Are you one of 3 boys?
I am one of 4 boys. So my other brother was one of the actually wrote the first tutorial for Word.
Wow.
So I come from a long line of very successful people. I'm actually the youngest of 6. I have 2 sisters, and they're successful in their own right. And also the son, grandson, and great grandson of entrepreneurs. So I have that entrepreneurial thing running.
Spirit, right. I do have to go back to what you said about all men should be of service. I agree with you, but I also think all women as well.
Yeah, I think it's easier for women, frankly. I do. I think women naturally,
what's easier for women?
Serving. I actually think women are more, my experience is women are more likely to serve than men are.
Well, in terms of from a volunteer perspective?
Yes. I mean, they're volunteering in schools, they're volunteering, they're a lot of women still, they're the primary raiser of the children, right? So they're primarily raising the children. So I just think there's a more natural inclination there. I think young men, it's a little tougher. Plus young women mature so much faster than young men.
Oh, for sure. I see what you're saying. I'm not sure I'm agreeing completely. I do see what you're saying. I do think the differentiator, though, from what you're saying, and perhaps what I'm thinking, is that perhaps women do hold up the community more, but I think when you do a service where it's not your choice, like it's your choice to go to the PTA, it's your choice to be involved with the school. I think it's a very different experience if you're put somewhere to serve, but it's not necessarily a choice. Different challenges, different growth. That's sort of kind of.
Yeah, certainly, while I'm not I'm no longer involved in the church, I wouldn't trade that 2 years as a missionary for anything.
Sure. I know. I do think that's fabulous. And, as a diehard patriot, we're not perfect, but I am a diehard patriot. I will never apologize for this country. I think what handicaps us in some way from what you're saying, and perhaps this, you can share how you took that experience and then being so successful, starting in the States, of course, internationally, is that we are so isolated, right? Mm-hmm. Really until 9/11, which, oh Lord, we can't go there. That's a whole other conversation. We never had really a war that we didn't start, civil war in this country. Whereas when you go to Europe, like I have colleagues that, they speak 5-6 languages.
Right.
I only speak, as you can hear, Brooklynese and English. I took French for 4 years. I've exhausted my French, right? Parlez-vous français. It's actually embarrassing for someone that considers themselves educated. But I do think that isolationism, permeates a lot of perhaps our challenges as we relate to the world and the concept of socialism, right?
Oh, I don't think there's any question. There's more than 50, less than 50% of Americans have passports, something like that.
Is that true?
Yeah, it's some. You'll have to look it up, but it's an enormous number of people in America who don't have passports. But the reality is, you can get pretty much anything you want in America. We're such a diverse country that you really don't have to go outside the country to get diversity. You can travel within the country and get plenty of diversity. My favorite place is Southern Utah. I still think it's the most beautiful place on earth. And I've been to a lot of places. And, so people don't travel. They don't travel overseas as much. And, if you're in France, you're in Paris, you're 2 hours from Belgium, Germany, right. Switzerland. You're just so close, England. So you're so close to the rest of the world, right? That right. It's so much easier. I think it's easier for Europeans to be, more diverse, frankly. Than it is.
They are more diverse, but they can also be more biopic in their diversity, if that makes any sense. Okay, so Mr. Underachiever, who's the author for Robert Kawasaki, such an underachiever. I apologize to all my listeners here for bringing in such an unaccomplished guest. Share with us, so you take this world experience you have, even as a young man, which is still a very formative time, right? You come back to the States. What are you doing with your life now?
So I'm going to school.
Did you go to BYU?
No, I went to the University of Utah. I absolutely would never have gone to BYU. That was the enemy. I grew up walking distance from the University of Utah. So I'm red and white through and through.
There you go.
Even though my parents went to BYU, but none of the boys did. So, but they did. In any case, so I went to the University of Utah and did my undergraduate degree in accounting, but I knew years before that I wanted to do accounting because I'd actually worked. My mother was the controller for my dad's printing company. And when I was in high school, I worked in the accounting department for my dad's printing company. I worked for my mom. And so I learned bookkeeping. I learned accounting really early, and I like numbers. I'm
into it, right? Naturally
good with numbers. And so, and then I thought, well, after my undergraduate, I thought, should I go into law or should I go into, because I love tax. I took 3 tax classes in my undergraduate. I loved every minute of it. So I asked the professor and I said, Dr. Haney, I said, what do you think? Do I get a master's in accounting or do I get a law degree? And he said,
law school and get an LLM.
Right. And he said, well, what do you want to do? Do you want to spend your time in tax or do you want to do general law? And I said, well, tax. And he said, well, then you need to be an accountant because they'll do a lot more tax than you will as a lawyer. And I thought, well, that's interesting. On top of that, didn't really want to spend my life with lawyers. So
smart man.
Spending your life with accountants can sometimes seem
marginally
better, but they're nice. They're very nice people. Okay. Accountants are very nice people, just not
I'm sorry
Not
for
always
the
that
attorneys
interesting.
out there that are offended, but Shakespeare did say, first thing we should do is kill all the attorneys. There was a reason for that.
There you go. Anyway, so I went to graduate school in the University of Texas, and I got my master's of professional accounting and tax. Great experience down there. I started my career in Salt Lake City at what was then Ernst & Winnie.
EY? Oh, okay.
EW. Yep. And then I actually spent 3 years in Washington, D.C. I was there during Ronald Reagan years. I was there.
Now you're loving doing tax.
Yeah, I'm loving it. I'm loving it. And so what happened was, I was only out of school for 2.5 years when they only rotated in anywhere from 3 to 5 people a year into national tax. And wow. I got selected, and I was very fortunate. And it was like 3 years of graduate education, because you're there with the smartest attorneys and accountants in the world, really, from a tax standpoint. And while I was there, I developed courses. I taught courses for the CPAs. I learned how to write. That's where I learned how to write, was because we used to say that you'd write something. That was in the old days where you'd send it to the word processing. So you'd handwrite it, and then you send it to word processing, and then you'd get it back typed up.
Right.
And so,
wait, do you mean write? You mean
physically write? Correct. Physically write. And so I turn it into my manager, and my manager would call it, they bleed all over it. So they'd use red pen, and literally it'd come back and it was solid red, right? Change this, and just, but that's how you learn, right? So you learn by making mistakes, by getting corrected. I had one of the partners there that I worked with in the oil and gas tax area. He wouldn't let me write. He said, "You edit for now. When you're ready, I'll let you write, but you're going to edit my stuff."
Why was that?
He wanted me to learn. He wanted me to see good writing. I thought he was one of the best writers I'd ever seen. He could literally make the taxation of coal interesting. I mean, the guy was amazing. He was just amazing. So I learned. He must have
been passionate about it as well.
He was totally passionate. He's from Kentucky, and he's just totally passionate about it. And so by the third year, though, he let me write. So I was very pleased that it's like a promotion, now I'll let you write. And because you've learned enough now, I think you can write.
But that is a great way to learn. Let me show you how I do it. Watch me follow. Yep. And then you learn. Yeah, exactly. He was a terrific mentor. So then I came back. Then I came to Phoenix. That's when I came to Phoenix. What brought you to Phoenix?
Ernst & Young.
You were still with the company?
I was still with the company. They transferred me out. It was a 3-year job in Washington. They transferred me out to Phoenix because they needed a real estate tax specialist. And that was my industry specialty, was real estate.
Oh my gosh, you were there right when everything started to be built?
Absolutely.
To be built up.
Well, not only that, I was there when the S&Ls fell apart. So I actually got there in 88. So I was
just going to say time date that for people listening that are young.
1988. So I was in Washington for the 1986 tax law change, which is the biggest tax law change in my lifetime. And
do you think that was a positive or a negative? And in retrospect, do you feel the same?
I think in the whole, it was a positive. It had some big negatives. Actually, it caused the S&L crisis. We wouldn't have had it.
How so?
Well, so you had all these doctors, professionals who invested in real estate, and they changed the law so that they no longer got the losses. They no longer got the tax benefits, and they changed it. And so all these partnerships had buy-ins over like 5 years. Mm-hmm. Well, they just didn't put money in anymore. So all of a sudden, all of the money dried up. And so that's really what precipitated that's really what precipitated the S&L crisis. It was the final straw was these passive loss rules that no longer did you get the losses to offset your income. So that was a big negative, right? I was there during the RTC days, the Resolution Trust Corporation. 1989, 1990, 1991, a huge crash in the real estate market. I had a client pick up acreage on the freeway on a major crossroads for 50 cents a square foot. 50 cents a square foot.
Wow.
And he actually lived off the land rents for the rest of his life. Just because
time is everything.
That's what was going on. That's what was going on. And so, so I was at E&Y for a couple of years, and then I went to a Fortune 1000 company that actually had they'd bought a savings and loan in 1988, lost $2 billion.
Yikes.
On this transaction. So that's why I actually learned some other.
Why did they recruit you?
They recruited me because they'd purchased a real estate development company.
Okay.
And they needed a real estate tax person. So I spent 4 years there, and then a short stint back in another big four company, which will remain nameless since we parted shortly thereafter.
Okay.
Well, if you're not fired at least once in your life, something's wrong, right? I mean, seriously, you need to get fired at least once in your life. So I lasted a whole 7 months there.
You know what? They weren't good enough for you.
It was a very bad fit. I should never have gone.
It wasn't a cultural fit.
It was basically, it was basically mother, the world saying, you know what, this is a bad fit. You need to leave. So
yes, the universe telling you get out.
That's when I started my first CPA firm. So I started my first CPA firm. I had 2 clients, and I decided.
Well, hang on. Were you thinking that you were going to go out on your own, or did that spur that?
It was losing the job, and I'm just going, okay, what do I do now? I could get another job, but I hated being an employee. I can't work for anyone. I'm a terrible manager. So I'm terrible in the middle. Okay. I'm fine at the bottom because I'm a hard worker, and I'm really good at the top because I can lead, but I'm really bad in the middle. I'm really bad at managing people. So,
but when you were in your first job for all those years, you were in the middle, no?
Yeah, but it was a different middle. So my career trajectory was very different. I mean, the first 2 years I was not in the middle. I was at the bottom, right?
The bottom.
Then I spent 3 years in the national office where I was at the bottom of the national office.
Got it.
And then I spent 2 years in the middle, and those, the last 2 years, they were tough. And then I left. Right. And so then I spent 4 years in the middle, at the Fortune 1000 company. And then when I went to the other big accounting firm, it was just too much. So I just decided, and I asked my wife, and we had 2 children. I was the sole provider. And I said, but they gave me a big severance. Tells you a little bit about, wasn't a good fit for either of us. And I said,
well, then they made the mistake when you hire a bad fit. That's on them.
They did. They made the mistake. So did I, but they did too. But then I just said, well, let's try it. And I tried to I actually went out and cold called. I talked to everybody I knew. That didn't work. I went from 2 to 4 clients in a year. It didn't work too well. But I had a mentor, and he said, there's an accounting firm that I think you ought to look at. You ought to buy it, and I'll lend you the money for it.
You ought to buy it.
You ought to buy the accounting firm. I'll lend you the money for it. I said, great. And I actually had already met the owner previously at a breakfast, and it was a good fit. And she was terrific. She worked for another year to help me transition the clients, and I was off and running. So that was kind of the start. But then the big change happened. So I got really busy. And so I brought in a partner, and that partner.
So you were a solo firm you were a solo owner at that point.
Solo. Yep. Solo for about 2 years. But then I got too busy. So I brought in a buddy of mine, and we became partners. We lasted for about 4 years, built the company up. And then that partnership fell apart. Half the clients went with him, but all of the staff stayed with me. And
wait. So why did that fall apart? I suspect this is like my area where it's the relationship. between
Yeah,
the
it was
business
values.
partners.
It was values. You know, I mean,
It took 4 years for the values to kill the relationship.
It
Seemed like
did.
a pretty solid guy. I would think it would happen quicker.
No. It took 4 years. I'm a very forgiving person, so I really am, and I let people do their own thing, right? And he was doing a lot of the management of the people and so forth. It wasn't until we actually we merged with another firm, and it was those partners who actually pointed out what was going on. And
because they were outside looking in.
They were outside looking in, and it was that kind of precipitated the breakup. And then he accused me of some things that he was wrong about. And so I wasn't okay with that. And he didn't like the staff, and he said we should just fire him. And I was just going, well, I like the staff, so that's a problem, right? Turned out he was not very nice to them, and I learned all those things afterwards, right? I mean, you learn those things out because they won't come to you because you guys are buddies, so why would they come to you? So, but anyway, Anyway,
unless you're seeking it.
Yeah, exactly.
Right.
Exactly. Yeah. And I wasn't. Yeah. I clearly wasn't. But the good news was one of the, so I started teaching at ASU, Arizona State, and I was in the graduate school.
Sun Devils, right? They're Sun Devils.
Yep, the Sun Devils. Yeah. I was
cute little logo.
Yeah, there you go. And I was teaching a tax class in their Masters of Tax program for them, that I created for them. And I I'd hired somebody from that class who'd actually come out of one of the other big four accounting firms. She was a manager, and she was an employee with that while I was with that other partner for about a year. When I broke up that partnership, when that partnership broke up, I asked her to be a partner. She was 26 at the time, 26, 27.
Wow.
She was young, but she was so smart. So smart. By the way, we're still partners. So
that's awesome. What's her first name?
Anne.
Anne. So
Anne.
I have a feeling that you promote women. It just feels that way to me.
Well, I have 3 business partners, 2 of which are women.
There you go. Smart guy.
So, you know what? Both these women. I mean, Anne is brilliant. Actually, one of the professors, as you said, that he came to me one day. He said, "I know we don't pay you very much, Tom, but you got Anne, and she's the best student we've had in 10 years. So you're fully compensated."
I get it. I link this to having a smart mom.
Oh yeah,
and having had worked for her, there's no doubt that influence is there.
Sure. Okay. I come from a long line of strong women.
Strong women, yeah.
Yep, absolutely.
Lucky you.
Yeah, very, very fortunate. Very fortunate. Very fortunate.
So you hire Anne.
Anyway, so I hire Anne. A year later, I make her my partner when we split up, and I say to her, I said, "So, should we fire half the staff or should we go get more work?" She goes, "Well, it's hard to find staff, so let's just get the more work." So I'm looking
back then,
right? Exactly. Even harder now. So I'm looking. I'm literally get a postcard in the mail and said accounting practices for sale. I call on one, and I'm talking to the guy, and the guy says, "Well, this accounting practice, this woman wrote this book, and she's really busy, but she does a lot of consulting." I'm going, "This sounds like a good practice." So I talked to her. We end up negotiating to buy the practice, and the first thing she tells me, she says, "You need to go read this book, Rich Dad Poor Dad, because the guy who wrote it is one of our clients." So Robert Kiyosaki and Kim Kiyosaki, that's how I met them, is because I bought an accounting firm where they were already clients of that accounting firm. So,
and back then he was just starting to.
He was big. He was big.
Rich Dad Poor Dad.
He'd been on Oprah. Okay.
So the pinnacle.
Yeah, he was doing the 20,000 people stages. And really going out there, but Robert's an interesting guy. I love Robert.
Yeah, what's the scoop? So hang on, Tom, slow down. So you know who he is, right? So when you first meet him, what honest honest. What was your first impression? First impression.
Boy, the first time I ever met him, he was speaking, and I'm going, God, this is interesting. I didn't know who he was before I read the book.
That's how I am when I meet famous people. They're like, do you know who that is? I'm like, I have no clue.
I had no idea who he was. And I saw him speak, and I'm going, well, that's really different from anything I've been experienced with, right? But like within a year, he's got me up on stage. And so he's very bold. He'll bring you up on stage, even though he knows nothing about you. He brought me up. Yeah. He had no idea that I had any training at all in speaking, which I had. I'd actually been, I taught classes for.
But he knew you were an accountant.
I mean, I was his accountant, so he knew that.
Okay.
Right. So I was his accountant, so he knew that. And he said, well, this is one of my accountants. And he brought me up, asked me to explain depreciation. And I remember one of our very first experiences together, he took me with him he had an interview with the Arizona Republic. And this guy didn't believe that you could do 30, 40% returns in real estate. And so he brought me with him as muscle, basically, to explain the numbers. And I explained to the reporter, and I've actually talked to the reporter since then. He's a nice guy. And I explained to him, I said, yeah, well, with leverage, tax benefits, yeah, you're easily going to get to 30, 40%. It's just not that hard. And so that was my first time I accompanied Robert, so to speak, personally.
Well, wait a minute. You jumped from being on stage to talking to the reporter. So tell us about your stage debut as far as Robert knew. So you're there, you don't know it. He calls you one up.
He calls me up and asks me to explain the concept.
I hope you had nice clothes on.
Of course. I was there. I knew I was there. Actually, Ann and I were there together, and her husband was with her, and the three of us were there attending the seminar, and that was it. But he knew I was there, and he brought me up on stage. Said, "Would you explain the concept of depreciation?" I said, "Well, depreciation is a little like magic, and because you've got an asset."
That's brilliant. Whose attention do you not have now? That's brilliant.
You've got an asset that's going up in value and you're getting a deduction for it. That's pretty sweet. And you don't just get a deduction for the money you put in, you get a deduction for the money the bank put in. I think that's pretty cool. So then I start, he has me on more stages. I start speaking. Fast forward to 2012, and we've gone through the whole recession, right? And we're coming out. I'm on stage with him at the Paris in Las Vegas. And this is the first time I really said this from stage. And I said, the tax law is really a series of stimulus packages for business owners and investors. And he looks at me and he goes, really? And right then the light went on with him. Oh, and from then on, we were traveling all over the world together. And that
what was that light? What was that light?
It was,
for the listeners.
Oh yeah. I mean, it's like the light goes on. Oh, you mean the tax law is not there to punish you. It's actually there to incentivize you. Right. And so that's a whole shift. And, I just written my book, Tax-Free Wealth, my first book.
Tax-Free Wealth, everybody. Make sure you check it out. But we'll give you an opportunity to learn more about Tom's book.
Still the number one bestseller in its category. And I just released that, and I'd gone through that whole thought process that, taxes are really a series of incentives. There's not much of the tax law that actually raises revenue. Most of it is actually a guide to reducing your taxes. And so, once you get that mind shift that, wait a minute, the tax law can work for me, it doesn't have to work against me, then all of a sudden the world changes, because taxes are our single biggest expense, right? So Robert figured out, he said, so let me ask you a question. So Robert's second book, I don't know if you remember, is called Cash Flow Quadrant.
Yep.
Cash flow quadrant. He says, look, there's 4 ways you can make money. You can make it as an employee, self-employed, small business, big business, or an inside investor, professional investor. Mm-hmm. how do the tax rates go with those four quadrants? And I said, well, if you make a good salary, you're going to pay 40% in tax. If you're self-employed, you're probably going to pay up to 60% in tax because you pay the employer share as well as the employee share. If you're a big business owner, all of a sudden it drops down to about 20%. And then if you're a professional investor, you can easily get to tax-free, so zero. So he goes, so you're saying that how you earn your money, because he's a big proponent of the B and the I side of the quadrant, right? Mm-hmm. So that's what he teaches all the time. He's saying, so basically, if you earn your money as a big business or an investor, you're much better off tax-wise than if you earn it as an employee or as a self-employed or small business. I said, yeah, that's very clear. And it's true in every country. And he goes, wow. And so that's why I go with him every time when he travels around the world. I just have to study the tax law of the country that I go to, which is, more fun for me because I like learning.
Yeah, that has to be a lot to learn though. The tax code and all the nuances.
It's a lot. It's not. It's remarkably it's remarkably similar from country to country. All countries.
Okay, so
go ahead.
Go ahead.
All countries use the tax law as incentives. All governments use the tax law as incentives. The biggest power the government has is taxation. That's their number one power.
We had a revolution over it.
Exactly. So we hear about flat taxes. Never going to happen, by the way, because no government elected official has ever voluntarily given up power.
Oh, right. Of course.
Right. And so we're not going to have a flat tax because a flat tax, they're voluntarily giving up their power because their power is to actually give out tax benefits. That's where the power comes from. So either raise taxes, lower taxes, we want you. Perfect example. Last year, we had the so-called Inflation Reduction Act, which I called the Inflation Enhancement Act. But most of the money in that bill was for tax incentives for clean energy,
right?
Solar, wind, nuclear, et cetera.
Electric, yeah. Mm-hmm.
Okay. Well, all you're doing is saying, look, if you invest in solar energy, we'll reduce your taxes. That's all the government's saying. Well, what they could have just handed out, they could just discounted the cost of solar panels. They didn't do that. They used taxes because people hate paying taxes. You said at the beginning, you hate paying taxes. Nobody likes taxes. So you actually get an emotional response out of reducing taxes that you don't get out of just handing out money, right? So that's why Kennedy was the first one to really use tax incentives big that way.
What did he do? How did he do it?
The investment tax credit. So he saw that manufacturing, he wanted to stimulate manufacturing in the U.S. And so he gave this 10% investment tax credit for new equipment that manufacturers would acquire. So just 10%, that was it, 10% credit. But that was enough, and it seemed to work.
And I remember, and I don't know the nuances, you probably do, during World War II, there was a lot of tax incentives for making the machinery for the war. Yeah. When I read, I was reading, I think it was FDR's book. They talked about the war machine because we really weren't a power. We weren't a powerhouse in World War II, right? And so we manufactured the equipment. So I think there was a lot involved with the taxes.
But remember that very few people paid any tax prior to World War II or even during World War II.
It was still
No, wages were not taxed. Wages were not taxed at all. Okay, it really was only the rich who got taxed. So in fact, you would have had to, when the tax law was enacted, you would have had to make today's equivalent over $7 million to pay any tax. Okay, so that's how big. Nobody paid tax. So it wasn't until 1944 that employees actually started paying tax. And what's happened since then is...
Did that have to do with the enactment of Social Security? Am I totally off base?
I don't know, frankly. But what
I'm sure
they wanted to tax they wanted to tax the wages of federal workers, but under the Equal Protection clause of the Constitution, they couldn't tax federal workers without taxing everybody else.
Got it.
But what they did was they put in personal exemptions that were big enough to eliminate the tax for the average salary.
Average defined back then as what?
Average salary, well, whatever average was. I mean, it was like $4,000, right? I mean, it wasn't a whole lot, but
Yeah.
it was the average salary, American salary, and so the average American didn't pay tax either, even in 1944. And what's happened since then is, of course, the rates have gotten the whole thing shifted. So employees didn't pay tax. Now they pay most of the tax.
So
and
how
now
does that shift happen? Do you have to put that in historical, political context?
Again, it started in the, it started in 1954. We had a new tax law in 1954, and then it started shifting more so with Kennedy and these tax. We got progressive tax rates. And then in 1986, under Ronald Reagan, we went to almost a flat tax, right? So we had two rates under Ronald Reagan. Right. But of course, that changed very rapidly within a couple of years. Those rates had been, 3, 4 rates, 5 rates, et cetera. Now I can't even remember how many rates there are. There's so many. And so what happened is then Ronald Reagan really used the tax law a lot. 81, 82, 84, 86, all big tax law changes. And one of the things that we forget now when we're talking about inflation and what the Fed's doing to try to reduce inflation was at the same time, the Fed was raising those interest rates to historical highs. And I remember my first mortgage was a bought down rate of 12%.
I remember that.
That was an FHA rate. That was a bought down rate. And, but while the Fed was doing that to combat inflation, Reagan was passing tax bills to stimulate the economy. So the 81 Act stimulated investment in real estate. The 82 Act was another big stimulus, 84 Act, and then the 86 Act. So all of these things, Reagan used, the Reagan administration used the tax law very heavily to impact the economy. And every president since then has figured out, oh, well, it was good for Reagan, it's good for me. And so, now every president uses that no matter what side you're on. If in 2017, Donald Trump used it to reduce taxes for real estate investors. In 2022, Joe Biden used it to reduce taxes for solar energy investors. So,
okay. So Tom, I have to ask you how, this is so fascinating to me because you have me, I have to remember that I'm interviewing you because I am just so captivated by what you're saying. It sounds so exciting from me, who my husband does all the numbers. I'm like, oh my God, I don't know how much I make, plus or minus last year, whatever, round it up. He goes, no, you can't do that. I need the numbers. But how do you, even with all the passion, how do you possibly stay up on all the nuances? When I talk to attorneys, right, because I work with attorneys, accountants, everybody, I say, at least the law doesn't change that much. I mean, it's excruciating, right? But with the accountants, I'm like, it's always changing. Yeah. So how on God's green earth do you keep up with that?
Every morning I read. I mean, do
you? What is it? What's a specific tax journal?
I do. I actually read the BNA. It's Bloomberg.
Okay.
They have a tax report every day, and I read that every day. And then if there's a case that looks interesting to me, I read the case. If there's a new law, I read all new laws. So we had 5 major tax changes during COVID. I read every line of every proposal of every law. So and what I do.
What is truly what is the motivation behind? Look, I'm not talking about politics, but what is the motivation behind constantly jerry-rigging the system?
Oh.
Not that had a bias.
Yeah, again, to me, politics is all about power. So it's really, we want to, politicians love to mess with the economy. They do. They love to mess, and they like writing legislation. They love messing with things.
Serve their position, not to serve the people.
They love to mess with the economy. I mean, and they may believe it. I mean, I have no question that Bernie Sanders believes what he says. I have no question that he believes it. Okay. And, and he would massively increase taxes, and he believes that's the right thing to do. Right. So he's going to do that if he has the clout like he did the last 2 years with Joe Biden. He had that clout, and he did everything he could to get his agenda passed. Bernie Sanders did through Joe Biden and the Democratic Congress. So I just think that they go, look, economists have shown over and over, you give somebody a small tax incentive, they will change their behavior. So they're using the tax to change people's behavior. And because they want the behavior change. They believe in climate, they believe in social policies, whatever it is, they believe in it. And so they're going to use the tax law to do that. So if honestly, if you go to any country and you want to understand their government and the policies of their government, all you have to do is look at their tax law, because it will all be within their tax law.
Okay. So basically, if I dumb that down from my understanding, is that, so I'm on this side of the aisle, and I want to, as a relationship expert, a human behavior expert, right now you're speaking my language. I want to motivate certain behavior. Right. So I have to make a law. The other side comes in, which is really the beauty of the government. It's amazing, our founding fathers. I want to motivate different behavior. So, so that actually, thank you, Tom, for that. I'm glad I'm learning a lot. Why that wanting to motivate based on the tax code makes so much sense to me from that perspective. I'm not so sure that's good for the overall health of the economy. Am I wrong? Am I right? Or it doesn't matter?
Well, I don't have control over that. So I don't get to choose that.
But you still can have an opinion.
I can. So I'm going to share something, may not be popular with a lot of your viewers. I think we should have a value added tax.
Like Europe.
Because we are at an enormous competitive disadvantage to the rest of the world, because we're really the only major economy, the only major economy doesn't have a VAT. Now, let me tell you the problem with having a VAT, because at the same time, I think conceptually we should have a VAT, but realistically, it's a terrible idea. And the reason it's a terrible idea realistically or practically is that look what happened in France. They reduced their income tax when they put in that 22% VAT. And now they've raised their income tax back up. So that's always what happens. I mean, look at Ronald Reagan.
And why did they have to do that if that was the panacea?
They didn't have to. It was just an opportunity for, liberal politicians to give money away. That's really what it ends up being. So, they get their projects and all that kind of stuff paid for. It's just easy.
And they retire at 50, but that's a whole other conversation.
Exactly. But that's what happened. I mean, that's what happened with Ronald Reagan, right? We had two tax rates when after 1986, two, and then they went up to over 40%, and then they crept back down a little bit under Trump. But the reality is, by the way, 40% is a magic number. I don't know if you know that, but people will radically change their behavior if your tax rate is over 40% versus under 40%. That's an interesting for a behavioral psychologist. That's an interesting point, because
why 40? Yeah,
I don't know why 40, but it's a magic. It's historically it's been a magic number that once you get over 40, people start it makes it so much more valuable to avoid the tax law, to avoid tax when it's over 40.
So that's interesting, because what I've learned from my women clients is that the reason why your tip type is 10% is because it's just enough where you feel it.
Yep.
Less than that, you don't quite feel it. More than that, it's punitive. Yep. So you're saying that's the role of the 40%.
Absolutely. And even if you look at the capital gains rate, which is at 20%, if you get actually in this last go around, they were talking about raising the capital gains rate. Well, the Tax Foundation, who's my favorite resource for taxes, tax information, they actually did the research, and they said, look, if you raise it over 20%, you actually lose money because people will change their behavior. So there's really those two rates, 40 for ordinary income and 20% for capital gains, that people change their behavior. So you've really got to manage that. And that's why I think that's why we landed at 40%. And by the way, 40% is the magic number all over the world. It's not just
people are people wherever you go.
Yep.
Right. And I will push back on you just for 1 second on the VAT tax that you said. When you said we're the only country in the world that doesn't have it, we are the only country in the world that has a lot of things that we would never want to give up.
Well, true.
So anytime someone says that, I'm like, whoa.
That's not, but that's not the justification. The problem is, can I give you a simple example?
Please.
Okay,
please.
let's take Boeing and Airbus.
Okay, great.
The two biggest airplane manufacturers in the world.
Mm-hmm,
okay.
Mm-hmm.
Most of us in the US, probably when we get on a plane, it's more likely than not right now, it's an Airbus.
Mm-hmm.
It's an Airbus. Okay. That's a French company. Now let's say that
Mm-hmm.
Airbus sells a plane to American Airlines.
Mm-hmm.
Okay. There's no value added tax because it's an export.
Okay.
Okay. As long as it's transferred and not in the US, there's no income tax in the US on that. Okay. Now, let's say Boeing does the same thing, but they sell their plane to Air France.
Mm-hmm.
They pay value added tax on top of income tax. So
France
even
does.
Income taxes may be roughly the same, you've got a 20% gross rate differential. And that's the problem. A major competitive issue with the United States and the rest of the world is that the rest of the world imposes this value-added tax on our exports, but we don't impose a value-added tax on their imports, on our imports. So that it's actually a competitive issue is what I'm talking about. It's not.
No, I get that.
It's not funding. Example. It's not everybody else has it. It's none of that stuff. It's just that from a pure competitive
it's a level playing field. It's a level playing field.
You want to level the playing field. That's how you level the playing field.
Right.
Now, what we do instead, of course, is we do tariffs. But then what they do is they fight back with more tariffs. So now we're paying value-added tax and tariffs. So we try to do it with tariffs, and it doesn't work. It doesn't solve the problem.
Okay, so Tom, I'm going to ask you a very, very sincere question. Like truly, why, or maybe you are, why are you not part of every administration's, I don't know, economic council? Or, no, seriously, I am totally serious. And I'm not talking about from a political perspective. I'm talking about from a knowledgeable we need this common sense understanding of what the hell is going on.
Well, unfortunately, if you look at the current administration, most of the people in the current administration came out of universities.
Academics.
They're academics.
They know nothing. They've never created a business in a world, in a job in their life.
When I was graduating from the University of Texas, my professors came to me and a couple of them said, "We'd really like you to stay and get your PhD." And I turned to them and I said, "I love to teach. And I think that's a great idea. The only problem is that I'd be phony. I don't have any experience and I need to get experience first." So I thought, well, I'll go get experience. And so I actually thought after 2 years, I'd say, okay, I'll come back after 2 years, get a PhD, but I got offered national tax. I'm going, which am I going to learn more from, a PhD or national tax? So I chose national tax, and that was the end of it. So that's the problem is, there's too much theory and not enough practice, and not enough practical, this is how we need to do things. Yeah, I agree. I think it would be really refreshing to have real practical people, actually in administrative, counseling our leaders.
Well, if anybody's listening and they have ties to any administration that wants common sense approach to taxes, numbers, economic policy, whoever because everything's 2 degrees of separation, have them reach out to Tom for sure. I feel that, and again, I don't want to get into a political thing, but I felt that with Steve Mnuchin, I thought he was brilliant with the policies that he ran because he was a businessman. No?
Yeah, I don't know. I mean, he's a finance guy, and to me, that's
Yeah,
a little
that's true.
different.
It's different.
It's a little different from being a businessman. I mean, it's like
Fair. Yeah.
our governor for the last 8 years was Doug Ducey. He was a businessman.
Right.
And you look at how he handled COVID, it was a very practical approach. You look at how he handled taxes and the economy, it was a very practical approach. Very hands off, very practical. And I loved Doug Ducey. I'd love to see him run for president because I think he'd be an amazing president. But I like that. I like that practical, but a little more hands-off approach, right? Practical and hands-off at the same time.
Laissez-faire, right? Laissez-faire.
Yeah, I'm a little more libertarian than probably anything else. So I just think, let the economy you got to regulate certain things, but for the most part, let the economy run, let people have their own lives.
For sure. That's the American dream, quite frankly, right?
Exactly.
So I know I took you so probably far off course from what you wanted to talk about, but is there anything particular, nuggets of wisdom that you want to, and we'll get to your book, I promise, but that you want to share with the listeners, because I really could speak to you forever.
Thank you.
Much to your dismay, I'm sure.
A couple of them. So I just share two little nuggets here. The first is, if you want to change your tax, you have to change your facts. Okay, and it's that simple. For example, if I have, like, I've got my coffee mug, my company coffee mug here, and somebody could ask me, is that deductible? And the answer is, I don't know. But if you ask me, how do I make that deductible? I can tell you. I can tell you what facts you have to change in order to make anything deductible. So taxes is really about behavior. I mean, it's perfect that we're doing this together, because taxes are all about human behavior. If let me give you an example. Let's say I'd like to deduct a meal when I go out with my spouse. Okay, we'll make it a business meal, and then it's deductible. Or I want to deduct I want to deduct my travel. Okay, you spend 4.5 hours of your 24-hour day. You spend 4.5 hours doing business, and the rest of the time you've got 19.5 hours to do whatever you want, and that trip is deductible. So you just you have to change your behavior. Now, you may not want to. You go, I don't want to do any business while I'm on vacation. I want to be on vacation. Okay, well, but that's your choice.
Then you can't deduct it.
Exactly. But see, my goal, and I think the goal of any good advisor, is to give people a choice. It's to give people a choice. But unless you have the information to know that there is a choice, or to know what the choices are, how can you ever make a choice? It's really de facto whatever you've been told, right? Mm-hmm. Well, it's my obligation to pay tax. Well, it's your obligation to pay the tax you're obligated to pay, but it's not your obligation to pay the maximum amount of tax, right? And nobody does, by the way. So the same people who are going after, say, we need to tax the rich more, I always ask them. I had somebody on my podcast he was really part of this movement to tax the rich. And I said, so you know that there's a box you can check on your tax return that allows you to donate to the federal government. Right. I said, do you mark that box? He said, no, I'm not going to do it if everybody doesn't have to do it. I'm going, so you don't believe it. That's like saying, I won't donate to a charity unless everybody donates to a charity.
That's right. I say that all the time to people. You want to pay my taxes? Go right ahead.
Yeah, go for it. Go for it.
Go right ahead.
Those would really be the two things I would share. Is if you want to change your tax, you need to change your facts and ask better questions. So don't ask if something's deductible. Don't ask if I can do this. Ask, how do I do it?
And that last one, ask better questions. I think that applies to all of life.
Of course.
All of life. Okay. So tell everybody about your book, and you must get this book. If you don't get this book, you are leaving money on the table, in my humble opinion. So tell us about your book, Tom, please.
Well, so Tax-Free Wealth is my first book, and it's been out since 2012. And it's still number one in the tax category. And it's just a very simple guide to reducing your taxes and change your mindset about taxes. My new book actually is the one I really love. My new book. It's called The Win-Win Wealth Strategy: 7 Investments the Government.
Say it slower so people could catch it.
The Win-Win Wealth Strategy.
The Win-Win Wealth Strategy.
Yep. 7 investments the government will pay you to make. And what we did in the win-win wealth strategy is we actually looked at what does the government get out. And this is perfect to this conversation. What does the government get out of tax reduction? What do they get from it? What do they get out of giving businesses deductions? What do they get out of technology tax benefits? What do they get?
What's in it for them?
What's in it for them? And not just policy wise, but actually financially. I actually run numbers in most cases, except for retirement plans like 401ks. In most cases, the government is better off with the tax incentive than without the tax incentive financially. And because it generates more tax revenue.
The behavior, right?
I mean, if you're incentivizing business and I can grow my business, well, now I've got employees who are paying tax. I'm paying tax on that income. So I'm growing. So it's incentive. So the government's your partner, right? And you're just being an active partner with the government. This is why Dr. Art Laffer, who was Reagan's economic advisor,
yeah.
The Laffer curve, he endorsed my book and he said, yeah, this is the way it works. And so, and we also looked at 15 countries. So we actually did charts and tables for 15 countries. So we want to show that, look, this is not a US issue. This is a worldwide issue. It's worldwide behavior. So don't think that the US is somehow different from everybody else.
It's the human behavior. What I'm loving about what you're saying is that you're approaching taxes. What, the tax man coming is a joke, right? The joke, but it's like the dreaded taxes, and you have just shifted it to such a positive mindset. Like I feel so differently now. Like I love this, right? Believe me, I'm
saying now it's fun. Now it's fun.
But I love the mindset. It's no longer toxic, negative. It's all right. What's the right question to ask to make this work? Where It's a win-win. I love that. So where can people get your book? And where would you like them to go if there's a bunch of places?
You know what? Easiest is Amazon, of course. But any of the bookstores.
You want them to go to your website?
No, they can go to Amazon. Amazon's great. Amazon or their bookstore, local bookstore. Go to your independent bookstore and ask for it. Let's get the independent booksellers carrying the books and just ask them. Say, you need to order this book. I need this book. So would you please order it for me? And we're just happy to have them do that.
Great. And where can people follow you, learn more about you? I know you're on social media, so share.
So two best places are my podcast, The Wealthability Show. And the other is just wealthability.com, which is my company.
Great. You're on Instagram too, right?
Oh yeah. Instagram, YouTube, TikTok. We have viral TikTok videos. It's awesome.
Great. Okay. So I have two questions left for you, if I may.
All right. You got it.
And the answer can't be yours. What's the last book you reread and why?
Who Not How. Who Not How.
By Dan Sullivan and Ben Hardy?
Dan Sullivan. Yep.
Oh, and Ben. Oh my gosh. Love it. And what? Well, do you want to say why? I'm sorry.
Yeah, it's really because I'm at a point in our business where I don't need to know more about how. I need to know the who's.
The right who's.
I need to have the right who's because I don't know what I don't know. And I need people who know what I don't know. And I need to be able to draw on those people. And they already know it. So why would I try to do it myself? Why would I try to learn it?
Great. And what is the one song that you can't live without?
Well, you might laugh at this, but this goes back. American Pie.
I'll spare everybody my singing. Why? You reference Kennedy a lot, right?
I love American. I love the song. It's an amazing poem. It's
Don McLean, right?
Yeah, Don McLean. Yep.
Is there any specific verse in there that you love?
No, it's just the whole thing. It's just this whole, it's the whole story. I love stories. And this is a great story. And you can make it out to be whatever part of the story. I mean, you interpret it any way you want. I mean, people have interpreted it for years, but I just think it's great storytelling in a song.
And when's the last time you heard it?
Oh, probably 2 days ago. So
unbelievable. That's amazing. That's amazing. Well, Tom, thank you so much. This was so much fun. You offered so much value. I am like so turned on to delve into your book, to ask the right questions, to call my accountant, to let the CPA, the firms that I work with know about your work too. And I really do love the way you frame it from such a
awesome.
win-win perspective.
By the way, we have a network of 65 CPA firms. And if you have CPA firms you work with that they'd like to learn more and get the training, we'd love to have them.
Great. Well, thank you. And thank you so much, Tom. And that concludes today's podcast episode. So make sure you like, comment, share, subscribe to this podcast. And I suggest you run to order Tom's book, not walk, run. I know you'll be happy that you did. Thank you so much. And until next time, be well.